Hello friends, this is Raj Sastry from Raj Option Trading. Today is April 23, 2022. Hope you are all having a good weekend. So today we will talk about a technique to generate consistent monthly income. So many people ask me how to generate consistent monthly income. So this technique is used by many people. I know a lot of people who are using it to make a living. So with that, this technique is called selling put option. Look, a typical stock or ETF normally has a positive drift or a positive bias. So in this, as you can see here, this stock went up to 30, came down to maybe 25, went up to 40, came down to 35, went up to 50, as you can see here. And in this case, there is a nice support level right here. There's a good support level. So what you got to do is really sell the put option below the support level. Look, we are selling the put option right here. Stock is at 30, we are selling at 20. Stock is at 40, we are selling the put option at 30. Stock is at 50, we are selling put option at 40. So this way, if you keep selling put option month after month after month, you can generate a nice consistent monthly income. And you can do it if you're a conservative investor or a trader. You could sell it on SPY, QQQ, SMH, and so on and so forth. These are stable basket of stocks or exchange traded fund, so typically risk is low. So I would not do this on an aggressive stock, but if you're aggressive, if you want to do that, go after a spreading technique or a vertical spread, as you call it. So with that, I'll jump in, look into this technique in little more detail. Look, seller of a put option will make money if the underlying stock increases in price, stays the same, or decreases. So there are a lot of probabilities. That's one of the reasons most of the people are attracted to this technique, because there are a lot of ways to make money here. Probability is in your favor. The key is to choose the right stock or ETF. And generally, if you're a put option seller, your outlook is bullish. You want stock to go higher. The risk is unlimited, but maximum is strike price less the premium received. And maximum reward is limited to premium that you received. So think of this way. So you are selling a service or a goods. For that, you always get a small margin. So this is the same technique here. You sell put option, your premium, your maximum reward is capped to the premium you received. Stock can go up $30 from where you sold the put option, but your reward is limited to premium that is received. The key here is you keep making the consistent income here. You are getting a fee for selling the put option, for taking the risk. That's why you're getting the monthly income, so or a premium in this case. And if you are selling it on an aggressive stock like Nvidia as an example, you could sell a spread here, so that way your risk is limited. We'll look at that also as you go forward. And you have to sell when the implied volatility is high. So look, right now stock market is really screaming hard. It's coming down pretty big. So when the situations like this, you could really sell put option on your favorite ETF like SPY, QQQ, SMH, IWM, and so on and so forth, and make some good monthly income. You can sell it way below the current price, so that way you are very much protected. So you don't need to worry too much, because you're selling way below the current price. And identify a clear area of support. We'll look into this in a minute. And also typically we sell it maybe 45 to 60 days to the expiration. So that way the risks that you take is limited to 45 to 60 days. And typically if you're a conservative trader, go after ETF, don't go after the stock. But if you want to go after the stock, make sure major earnings are done. So that way at least there is that uncertainty of earnings is gone. But if you want to play the earnings game, you could do that too. But make sure you are way below the current stock price when you sell put option. passage of time, or theta decay as we call it, is your friend when the stock is above the strike price. And typically we sell it around a delta 15 or probability of touch around 30. So that way there is a 30% chance the stock will touch your strike price. So that's a good chance that you could take and earn some money for taking the risk. And typically avoid the stocks with the heavy debt, and also avoid stocks that pay too much dividend. So you don't want such candidates here. All right, now let's look at when not to sell and when to sell put options. Typically, the best time to sell put option is after news, negative news, or a FDA rejection or earnings miss. This is when there is a heightened implied volatility. Implied volatility is too high. That's the good time. And typically, I love to sell put options on the growth stocks with a temporary weakness, or even my favorite ETFs like QQQ, SPY, XLV, which is healthcare ETF, XLK, IYR, so on and so forth. You could sell put options on these favorite ETFs, and you don't need to worry too much because these are a basket of stocks. When these come down, like yesterday as an example, or a Friday, that's when you can make a lot of money selling put option way below the current price, and you are pretty much safe because you have sold it way below. And don't be afraid of option assignments. It can be a great opportunity. Buy your favorite stock or favorite ETF at a good price, and typically lighten up when the market is up, and only buy when the market crashes. So this is a very good way to invest. Typically, folks, many people I know are a little bit impatient, but if you're patient, wait for situation like Friday, market came crashing down, great opportunity, implied volatility shot up. That's when you buy, that's when you sell put option way below and make some good premium. All right, now let's look at when not to sell put options. Typically, bad time to sell put option is after accounting scandal. You don't want to go take such chances, avoid such stocks. And you don't want stocks with a deteriorating performance, so to avoid such stocks. And avoid when the open interest is low and there's a high bid-ask spread, so you'll lose too much money in such situations. And don't take too much margin. Be a little bit careful. When you sell put options, if you have a margin account, broker will basically let you sell put options. It will not cost you any money. You're playing with the house's money, as we say. But don't go too much into the margin. You don't reduce your buying power too much. Keep your buying power to say 50% or so. That way you are still safe and you don't use up all your buying power. And buy back the options when you reach 50% of profit or so. That way you can play next day when the market tanks, you have money to play the game again. All right, so with that, let's jump in here and look at how to sell put option. Look here, we got an example here. We got a stock here. Stock is at $40 right now. That's the current price. And look, we are selling a put option at $30. So, we looked at the support level. Stock has a good support around, say, $35. We are even going below that price and selling put option at $30 because we are pretty confident it will not reach this price here. And for taking that risk, we are getting $2. $2 times 100, we are getting $200. That's the money for you to keep if the stock stays above $30. Because you collected $2, your break-even point is 30 minus 2, 28. As long as the stock stays above 28, you break even. But if the stock comes below 28, then you'll start losing. That's why you got to make sure it's a good support level. In this case, we identified 30 as the good support level. We sold the put option at $30. So it's a key to understand the support level and make sure stock has got a bullish outlook as we go forward. This is a good strategy. Especially I love to do this on ETFs where there is no earning risk. There is no need to worry about the earnings. All right, so with that, let's jump in here and look at top stocks and ETFs to sell put options. So typically we would love to look at stocks with volume more than 1 million shares traded, high IV rank or implied volatility rank, typically positive net margin more than 10%, positive sales growth and positive cash flow and positive performance. So we look at these criteria typically to sell put options. So with that, let's jump in here. Look, right now we are in the fear zone. The fear and greed index is at 40. It's in the fear zone. So as the market fluctuates from greed to neutral to fear, that's when you start selling put options, because the moment market is in the fear zone or in the extreme fear zone, you start getting very good premium for selling put options. That's when you can go into your favorite ETFs like SPY, QQQ, and so on and so forth, sell put options way below and earn some consistent monthly income. All right, now let's look at the top ETFs here. Look, we can stay on the top ETFs only. We got SPY here, S&P 500. S&P 500 has been crashing. It's 11% below 52-week high. It's in the correction territory. Look at the IV percentile here. IV percentile is 63 on a huge basket of 500 stock, which is a SPY ETF here. And look, it's completely sold off. RSI is 37. My favorite time to sell put option is when IV percentile is high, say above 45 or 50, and RSI is low. It's below, say, 40. So this checks the box here. We got SPY with IV percentile above 40 or 45 and RSI below 40. So it's a great one to sell put option. And then you got QQQ. I love QQQ also. It's also, look, IV percentile is 63 and RSI is 36. This also checks the box. We could sell a put option here also. And then you got a few more here. Typically, I don't like to sell it on EEM because money is less, but I love to sell it on IWM. This is a good one to sell a put option. Look, same story here. High IV percentile and low RSI. That's when you sell a put option. Low RSI means it's sold off here. There's a good chance to bounce back. High IV percentile means you get good premium. And you got a few more here. I love SMH also. Semiconductor ETFs. It's been crashing. You could go way below current price and get some good money. And then you got a few more here. DIA is a good one. I love to sell it on IBB also. It's also a good one. And also we got XBI. That's also a great one to sell put option. So if you're a conservative investor, don't go after stocks. We look at some of those. You should go after these ETFs. You can make some good money. I know people doing this day in and day out, generating consistent monthly income. And you don't need to be on the screen on the stock market application all the time, because you're just selling when the implied volatility is high, when the market is crashing. You see a news in the CNBC that market came crashing down by 500 points. That's when you wake up and sell some put options on your favorite ETFs. That's a good way to make consistent money. All right, now let's look at some stocks. So we got few stocks here. Look at the top, we got Nvidia. Nvidia, you got a little bit careful here. Earnings is coming up 525, as you can see here, next month. So that market is crashing down as usual. Look, Nvidia has got an IV percentile 86. If you're a daredevil, you could sell some put option on Nvidia. So right now we got some more time for the earnings. So you can sell some put option at a put spread way below current price here and make some money. So you got to be careful here. If you sell put option on Nvidia right now, as the earnings approaches, this IV percentile will even go higher and higher and higher. So that's when there is a slight risk here, because you're getting some money here, but you'll start seeing your account in red or negative because IV percentile will only increase as earning approaches. So that's why it's always good to sell put option just after the earnings, or if you want to avoid earnings, sell put option on the ETFs. On the other hand, Tesla earning already happened. Look, next earnings is 727, so you got a lot of time in your favor. So you could sell some put option on Tesla here after the earnings. IV percentile came down, stock also came crashing down, as you can see here. So you could sell some put spread on Tesla being a high price stock, and make some good money there. And we got a few more. Look, Intuitive Surgical, one of my favorite stock came tumbling down after the earnings because they give some tepid guidance. Look, IV percentile is high, low RSI. It's a textbook example here. You could sell some put option way below and make some money. And we got a few more here. Look, stable stock like Visa is one of the good stock here. Look, it's got high IV percentile here. Keep watching the IV percentile, all high IV percentile here. And Visa, look, earning is 426. I think it's coming around the corner, so you got to be careful. That's why implied volatility shot up. Typically around the earnings, implied volatility goes higher. And keep watching the earnings here. If you want to be a little more cautious, you could avoid some of the earnings plays, but in this case most of these are earning play here. And we got one more, which is Lululemon. I think Lululemon probably earnings is coming up later. It's already done. You could look at this one also here and sell some put option. IV percentile is high, as you can see here. And we got a few more examples here. I love Synopsys, Fortinet, all great stocks here. Earning is coming around the corner, as you can see here. So you could look at such names here and sell put option way below and make some good money. And we got Waste Connection, which is a very good waste management stock, and IV percentile is pretty high here. Look, 47. You could sell some put option here also. All right, so we got a few more here. We got Viva Systems. Look, earnings is around the corner here. If you're a daredevil, you could sell some put option here before the earning. But if you don't want to, or if you're a little bit conservative, then you could sell some put spread way below the current price and make some money. All right, so now what we'll do is we'll look at TD Ameritrade from Thinkorswim from TD Ameritrade and see how to sell put option on your favorite ETFs. So with that, let's jump in here. All right, so we are in here, Thinkorswim platform, and let's go to a chart here. All right, so let's look at a chart. Let's bring up SPY, S&P 500. It's the mother of all ETF, as you can think of. Look, right now we got a 1 year chart in SPY. SPY came tumbling down, as you can see here. What I will do is I will increase the time frame here and make it 2 year time frame, so that way let's see a good support level for SPY. All right, so we got a 2 year chart here of SPY, and as you can see here, let's bring up the chart here. All right, so look, we got the chart here, and as you look through support level here, we got nice support level right here around 360 or so. Let's get rid of this around 360. I think we got a good support level here. You could look at 360 as a nice support level. This level was reached way past here. I think it's a good support level here. And right now SPY, as you can see here, it's been dropping off. Look, we got RSI coming down. That tells you momentum is down. IV percentile shot up here, which is the blue line here. And we got DMI telling, red line going up. It's bearish right now. And check-in money, smart money is pulling out, as you can see here. Typically this happens after the huge big crash. That's when you jump in and sell some put option, mainly because look here, IV percentile is 63 on a big ETF like SPY. It's a great time when the IV percentile is high to sell some put option. All right, so with that, let's jump in here and look at the option chain. So let's bring up SPY here. And typically I like to go, in this case, maybe say 41 days out, but typically 40 to 45 or 30 to 45 is good. Look here, we got option chain here, and if you look at SPY here, look, let's bring up this here. We got 52-week high 479, 52-week low 404. So right now stock price is at 426. So what we can do is we can go look at the option chain here. Look, we got all this option chain here. Look around. We looked at the good. We looked at the good support level around 360 or so. Look at 360. We are right here. 360. You're getting a good premium here. $1.75, and also keep watching here. We got here probability of touch. This tells you what's the probability of this price, which is 360, getting breached by expiration date. There's a 18% chance the SPY price, which is currently 426, can reach 360 by this date here, June 3rd. So I think it's a good chance here. So what you could do is you could go to 360, or if you're a conservative, go one level down here. At 355, the chance is only 15% of reaching this price here. You could sell some put option here. And look here, open interest is so much here in down here, so I would not be a daredevil. I would stay maybe 360, or even right here at 350. There is a good volume, as you can see here. 350 is good enough for us. We'll sell put option right here. So you could sell put option. You'll earn $133 if the SPY comes down to say your price 350 by June 3rd. You can buy ETF at 350. Otherwise, you get to keep this money for yourself. You can confirm and send here. There you go. We are receiving $133. We are selling the put option way below current price here, and your buying power effect is $3,000. If you have a brokerage account with a good margin account, you'll get some free money from your buying power to sell this put option using your stocks as collateral. So it's a good way to sell. So you could just go sell. So if you're a little bit conservative, what you could do is really, instead of selling a naked put like this, you could sell a put spread. So if you want to sell put spread here, you could even go one level high here. You could sell 355 and maybe say 330 spread. So let's do that. So you could do 355 here and just go here, sell, and vertical. There you go. We are selling a vertical spread here. We are selling put option at 355 and buying it back. Let's go a little lower here, say 340 or so. Let's see how much money we will receive here. There you go. So it's a $15 wide spread. You'll receive 48 cents. What you could do is we could even go a little lower here, 335. And look, here we get 58 cents. So you could also do one thing. You could go a little higher here and do 360. There you go, 360 here. So you receive 81 cents here. It's you can confirm and send this. If you are a conservative investor, you could do something like this. You have a big account and you could keep on doing this month after month. Most probably, the SPY will not reach 360. You get to keep your entire 81 cents. And because it's a defined risk strategy, you're taking a risk for just $25, as you can see here, between 360 and 335. It's a little more conservative strategy or defined risk strategy. You could confirm and send. And if you don't want to, if you want a little more higher money, you could also buy a little bit, like at 330 here, you'll get a little more money, as you can see here. Now you're taking a $30 risk. For taking $30 risk here, you're getting 91 cents. You could confirm and send here. And your buying power effect right now is 2,909 here, which is, it's a $30 spread here. So it will stay constant. Stock SPY may come down, but because it's a defined risk strategy, your margin will keep constant. It will not fluctuate as market fluctuates. You could confirm and send this and go from there. All right, let's do one more here, QQQ, and go from there. So let's bring up QQQ, which is one of my favorite here. Could do QQQ, and look, QQQ has been also down here. It's again a 2-year chart, as you can see here. I think we have a good support level right here. This is a nice support level right here, around 302, as you can see here. This was breached back a while ago, as you can see here, back in February of 2021, while ago during COVID days. So with that, let's try to sell some put option on QQQ here. All right, QQQ, as you can see here, the price is about let's say 325 right now, and 52-week high is 408, 52-week low is 316, and we want to go much below that and sell some put option. All right, so let's go in here and look at the option chain here. So we looked at option chain around current price is 325. You want to go way below, and look, there is a good money to be made right now. We will sell, maybe put option around 260 or so, which is a good enough level. Look, 260 right here, and chance of QQQ coming to 250 by June 3rd is, look, it's just 16%. That's a chance that we can take. But if you're a little more conservative, I say go even a little bit below, sell a put option right here at 255. There you go. I can confirm and send here. I'll get $121, and my break-even price is 253. I can take the chance. It's about say $70-80 below the current price here. I could confirm and send and go from there. And if you're a little more conservative investor, you could do a spread here. For spread, you could even go a little higher. You could go 260 and maybe 230 spread here and sell that. So look, you could sell here just a spread and vertical spreads. There you go. So we are buying at 260 here. We are selling at 230, $30 wide spread. For taking that risk here, you're getting 97 cents. That's good enough. And confirm and send. Your break-even price right now is 259, which is way below current price. And you could confirm and send. There you go. So this is a good way. And let's do one thing. Let's look at one or two stocks which are a little more stable stocks. So for the first stock, let's go into let's see here. Let's go into a stock, Lily. Lily is one of my favorite stock. Look, Lily right now, IV percentile is 45, slightly higher, as you can see here. And Lily has been doing nicely. Look, nice up, down. And as you scan through here, nice upward drift here, nice upward drift in the stock. And support level, there's a nice support level at around 225. We'll even go much lower here and sell put option. Right now, momentum seems to be down. And look, IV percentile is going higher, as you can see here. And look, DMI perspective, we got a red line going higher and blue line coming down. It's a bearish crossover right now. And look, volume average on the balance volume is slightly down here. This is a stable stock. I feel good about this. Even though earnings is coming around the corner, I think it's a good to sell some put option on this stock here. Let's go in here and look at Lily. So we are coming to option chain here. We'll do same thing. 41 days out is good enough. And look at Lily here. Lily has got around 230. You get 97 cents to 235. This I think is pretty good here. We could sell at 235. Probability of stock reaching this is 28%. I think we can take the chance here and sell a put option right here. And we're receiving 133. That's $133. There you go. So this is a good way to sell put option. You're going way below the current support level and selling put option. I know a lot of people who do this on a month after month basis. If you're a little more conservative, look at these ETFs as we have it here. ETFs like SPY, QQQ, and even even GLD also works. You could do SMH, IBB, XPI, and so on and so forth, and make consistent monthly income. You're not going to earn a huge upside surprise because you're profit is limited to premium you received. That's why you consistently sell on a monthly basis and keep earning the money. That's a good way to earn money. So with that, thank you very much. Happy investing and trading. Please subscribe.